I published a blog post earlier this afternoon, April 2nd, 2025, where I discuss most of my stock and bond trades this week. I did not sell any stocks or stock bonds. I bought about $2,100 in dividend paying stocks. I discussed buying 16,000 in corporate bonds in that post published earlier this afternoon, and I will discuss the remaining 11,000 in principal amount of corporate bond purchases in my next post that will be published in a week or so. And I bought 5,000 in the 3-month T-bill auction last Monday. I'm now alternating my weekly T-bill purchases between 5,000 and 10,000 each week. So next Monday I will be buying 10,000 in the 3-month T-bill at auction. Stock investors welcome the BLAW April employment report with jubilation today. It was released prior to the market opening. I suspect that the positive reaction was in response to the report failing to show much impact yet from the tariff war. Annual wage growth through April was reported at 3.8% and has been trending down over the past several months. The annual average wage growth was 4.1% through January 2025. BLS reported 170,000 net new jobs, but revised the prior 2 months down by 58,000, and that would be for February and March. Both months were revised down. The April report is also subject to revision later on. The BLS noted that there was only a 9,000 fewer federal government employees in April, but noted that those receiving paid leave or severance would not yet be counted as unemployed, and many of the people that are being let go are receiving a buyout offer, which is paid leave or some kind of severance payment. There was also a significant reduction in the probability of a Fed rate cut on or before the June meeting based on the CME FedWatch tool that uses the federal funds futures contracts to make estimates of changes, the probabilities of changes in the federal funds rate. The more probable than not scenario now is no rate cut in June, but close to an 80% probability of at least a 25 basis point cut in July. In other words, the people that buy the federal funds futures contracts now have changed their opinion from a rate cut in June to a rate cut in July, based solely on that employment report released earlier today. The July probability, however, is not consistent with the 3-month Treasury bill trading at around 4.32%, which is within the current federal funds range of 4.25 to 4.5. That bill matures or will mature in early August. If the job market continues to hold up, even with more modest monthly gains than what was reported today for April, the Fed needs to remain on hold, in my opinion, until it has more information on whether or not inflation is about to or is going to accelerate in the coming months. I have been searching for more electric utility first mortgage bonds to buy. In my last post published earlier this afternoon, I discussed buying a first mortgage bond issued by San Diego Gas and Electric maturing in 2035. This is my first purchase of a first mortgage bond issued by that company. San Diego Gas and Electric has a number of first mortgage bonds outstanding. I picked the one maturing in 2035 since the coupon was 5.35%, meeting my greater than 5% coupon criteria for bonds maturing in 2033 to 2035. And the YTM was slightly higher since I bought at a discount to par value, and it was at 5.472%. I'm likely to slow down my stock purchases next week due to the stock market rally. I will switch to selling when the VIX returns to below 20 movement, provided I am able to sell a stock or a stock fund at a price higher than the closing price on February 19th, 2025, when the S&P 500 hit an all-time high. That is basically, I'm trying to restrain my selling since my stock allocation is so low that I'm loath now to even sell stocks that are still showing good gains. The stock allocation remains close to 8% of my assets held in brokerage accounts and is generally spread over 200 to 250 dividend paying stocks. My brokerage accounts, and I have 4 of them, are very close to their, or even higher in one case than their mid-February 2025 closing values now, which means I am running in place with the values as of February 19th, 2025. With the dividend and interest payments that I have received since the market hit that high. And I'm receiving dividend and interest payments throughout each week as I sometimes provide snapshots in my blog of just a daily flow into 1 or 2 accounts.